Michael Saylor has bought even more Bitcoin, and he's telling other major corporations to follow suit. I'm Natalie Brunell for Bitcoin Magazine, and at this point, it would be breaking news if we heard Saylor stopped buying Bitcoin, right? Here's his latest purchase tweet. MicroStrategy has purchased an additional 660 Bitcoins for $25 million in cash at an average price of $37,865 per Bitcoin. As of 1/31/22, we hodl 125,051 Bitcoins acquired for $3.78 billion at an average price of $30,200 per Bitcoin. Now, this news comes as Michael and his company kicked off MicroStrategy World 2022, where they're updating investors on their Q4 performance and talking about Bitcoin for corporations this week. And Michael sat down to interview two of Bitcoin's biggest thought leaders, two of my favorites, Lynn, Alden, and Jack Dorsey. So let's begin with Block CEO Jack, who chatted with Michael for about an hour about Bitcoin strategy and where he sees the future of Bitcoin allocation for corporations. Now, here are some clips from that discussion, starting first with Jack talking about Bitcoin's transparency, resiliency, and security as a network.
And the most important thing is you can see it. You can see how it was built. You can see the instructions with which it's built. You can see how it runs. You can see the past history of disagreements and how resilient it's been to attacks, both political, government, individual, greed. It's resisted and been resilient to nearly every attack, and there are more to come. But I have no doubt that the model itself, the development model, the operational model, will solve the problems it faces better than any other development model I've seen in my lifetime.
And of course, we know and have been following Jack and his company spearheading efforts to supercharge and expand the Lightning Network and support core developers in the space. Here's Jack talking about the evolution of Bitcoin's network use cases.
You see Bitcoin / Lightning as like universal monetary protocol?
Yeah, 100%. I mean, and probably beyond that. I mean, there was a time early in Bitcoin's history when there was less of a focus on Bitcoin as that currency aspect and just as that transport, and more on blockchain technology. Blockchain technology is amazing, but the network's power is what people do with it and the use cases. And the use case for the internet to have something like this is, I think, as fundamental as TCP/IP or HTTP, SMNP, which is a mail protocol. So these open protocols create companies, they create projects, they create entirely new cultural and societal shifts that I think ultimately lead to more trust and more transparency as time goes on, and diminishment of all these barriers and boundaries that we've erected in the past.
And here's a final great clip. Here's Jack's take on why Bitcoin is built to last.
Predictable. It's deliberate and it's predictable. I mean, Bitcoin gets a lot of knocks, especially in the mainstream media, the technology mainstream media, versus Ethereum in terms of speed of development. Ethereum moves very, very fast in comparison. But it's a question of, what is the ultimate outcome of those moves? Bitcoin is very deliberate about what goes in and what stays out. And that does mean it's slower, but those slower things tend to last. And they tend to be a whole lot more predictable in terms of the direction they're going. They tend to be a lot more secure. They tend to have far better uptime and usability than anything else. And that's not to say that there's a ton of great ideas in the sandbox everywhere and happening in all these other projects. They're great sandboxes that will test ideas very, very quickly. But that deliberateness is what makes Bitcoin, to me, the potential for this internet's native currency, and gives so much confidence as a business owner, as someone running one of these companies, that it's going to stick around, and it's going to serve billions of people throughout decades going forward.
Yeah, you can have lots of innovation at layer 2 with projects that compete against Lightning, or layer 3 with applications that compete against Cash App. But I don't have to speculate about who's going to inherit the Block Corporation in 100 years. if I do business with you now, I have the option to take my level 3 assets to a layer 2 to a layer 1 and give them to my grandchildren. And that makes all the difference, I think.
And after his discussion with Jack, Michael also spoke with one of my personal favorite voices in the space, the incomparable and ever brilliant Lynn Alden. Their chat was both a global macro review and an economic outlook for the future. Here's Lynn talking about Bitcoin's distribution and the behavior of long-term holders.
And what I have here is the the 1+ year HODL wave. We could also call it the Bitcoin distribution cycle. And what we see here, so the blue line is Bitcoin price. And the yellow line, the orange line, is the percent of coins that have not moved on chain in more than a year. So of course, Bitcoin can be held multiple ways. Some people hold it on chain, some people hold it on exchanges, some people hold securities that are tied to Bitcoin in different ways. And this is looking at the very large snapshot of on chain, which is a very big part of the market still. And what you generally see is that during these major bull runs, all this new capital comes into the space, and some of those longer term holders start to sell into that strength. Basically, they experience 5x, 10x, 20x gains in some cases. They have these, they have these life-changing amounts of capital appreciation. They want to rebalance, they want to consume, and so they distribute into some of that strength, and a lot of that new capital pours in. And then you generally see during these more consolidation type of markets, these bear markets, you generally see the reverse. You have the longer term, more knowledgeable, higher conviction holders go back to, they become a larger and larger share of the market over time. And so what we see now is that we're back in this distribution cycle where, during the early kind of bullish period of 2021 and, the whole phase there, those longer duration holders are willing to sell into that new strength. But then throughout this consolidation that we've been in for the better part of a year, those longer term hands have not been willing to sell at these prices. And, many of them are still accumulating at these prices, dollar cost averaging. Coins are continuing to go from kind of those, those faster money hands or those weaker hands into those longer duration, stronger, less liquid hands. And so that's generally what sets up kind of the next cycle. You have the macro events. You have basically, you can separate it into demand and supply. So on demand, you have what we covered before, things like risk on or risk off periods, how much liquidity is in the macro environment. Those types of factors can determine how much capital comes into the space or leaves the space. Meanwhile, the other side of it is the supply side. How much of the existing coin base is available for liquid purchase versus how much is locked up into very strong or illiquid hands. And what's made this cycle rather unique is that, in these prior periods when you had these peaks in demand, that was the top of the cycle. Whereas actually in this time so far, we hit a slight new high later in 2021, not because demand was as high as early 2021, but because you had moderate demand and really, really tight supply. And so there's really two sides of the market to keep monitoring. Basically different analysts, I think, focus maybe too much on just the demand side or just the supply side. And we put both together, basically what we're seeing is right now we're in kind of a weak period for Bitcoin demand, as you would expect from economic deceleration, liquidity being pulled from the market, while the supply side is one of the most bullish setups we've seen.
Now, other than these strong underlying fundamentals, Michael and Lynn also discussed the positive developments surrounding Bitcoin's adoption and acceptance from a political and regulatory point of view. While other countries like China turn away from Bitcoin and its economic opportunities in favor of social and capital controls, in the US, we're seeing Bitcoin understood as digital property, and there's a move toward incorporating it in the financial system through the channels currently available, with everyone, of course, awaiting that spot ETF that could open up more lanes of highway for institutions and pension funds. But the big point is the US is poised for a major advantage if it gets this right.
Yeah, I think game theory suggests that basically countries that don't need capital controls or have looser capital controls are in a much stronger position to embrace Bitcoin and basically then say, check to you, China. And so, basically that it's their problem if they're unable to or unwilling to open up certain things to the rest of the world.
Yeah, so the growth of Bitcoin and the growth of a stable coin dollar, both of those are going to create more pressure, more financial pressure on China and isolate them in a way. It's like isolating yourself from the internet, except it's might be worse because the network effect of trillions of dollars of US dollars and trillions of dollars worth of property on the Bitcoin network is going to be a pretty powerful network to fight against. You know, I don't know. I think it's more powerful than simply doing your own Google Maps. I mean, they blocked Twitter and they blocked Google and they blocked Facebook and they created their own stack. But this is something which is potentially 10 to 100 times more valuable. To block it could be 10 to 100 times more painful.
I agree.
We'll see.
And finally, this was an interesting clip about Bitcoin not being red or blue. It is apolitical.
Well, I mean, I think the good news is that there's no unanimous view, right? So you have bipartisan support across the board in some cases, even though you have, I think, different percentages. And so there are conservative politicians that embrace Bitcoin. There are progressive politicians that embrace Bitcoin. You know, early on in its history, libertarians were quick to identify Bitcoin as something useful for their ends. But of course, as it became a larger and more mainstream asset class, it got enough to caught the attention of other types of politicians. In the United States, I think so far we're seeing more interest on the political right, and so countries like Texas or Wyoming have been quicker to embrace Bitcoin. Some of the early proponents in the Senate and Congress were more from the Republican side, but we do see it. When for example, we had the hang up with the infrastructure bill and how they were going to touch on digital assets. You had bipartisan politicians chiming in on that, because it's really more about, I think, education versus that kind of strictly polarized political view. Bitcoin itself is not really Republican or Democrat. And so I think different sides see different things in it.
Now, these discussions are available on YouTube if you want to check them out, and we'll be following this event for more updates from MicroStrategy World 2022 to share with you. For more headlines, head to bitcoinmagazine.com.